We think the Canadian dollar can offer some great trading opportunities this week. Stay tuned to this video to find out why. Hey guys, it's Arnie here from Forex Source, where we help you to trade and understand the currency markets better. Now guys, on this channel, we do a lot of educational trading content specializing in fundamental analysis. So if you're new here, definitely consider subscribing. Guys, welcome to another week ahead video. This week's video will cover the trading week from the 8th to the 12th of July 2019. And this week we have the BOC, which is the Bank of Canada's July monetary policy rate decision. Now we'll also have the statement as well as the press conference, and the outcome of this meeting can create great trading opportunities for us this week. So let's go straight to today's video to find out how we can prepare and possibly trade these important events. Okay guys, now our main focus point for this week is a possible trading opportunity on the Canadian dollar. Now, following the BOC's wait and see policy stance, the market has basically dropped any rate hike expectations for the BOC for the rest of 2019, as well as over the next 12 months. And as such, the bias for the Canadian dollar was shifted to a more neutral one, which means the future outlook would be very dependent on any incoming data that we receive coming out of Canada. Now, the BOC was seen as being a little bit more upbeat during their May meeting, noting that the recent data have reinforced their view that the slowdown the economy experienced in late 2018 and early 2019 was temporary. Now, we know that one of the biggest influences on the Canadian economy and ultimately the Canadian dollar is oil prices, and as a very oil-dependent economy, oil prices can drastically impact the Canadian dollar. Now, after the massive drop we saw in oil prices in 2018, there's been a substantial improvement over the recent weeks, with WTI strengthening over 18% in 2019, which has been supportive for the Canadian dollar. Now, other recent data points from Canada has also been better than expected. We had CPI data for May surprising to the upside, with both the month-over-month and the year-over-year numbers beating expectations. We also had Canada reporting the highest trade surplus since December 2016. We also had GDP for April, which printed higher than the markets were expecting. Now, most recently, guys, on Friday, we also had the June jobs report. Now, the jobs report did show a contraction of 2,200 jobs, but the loss came from part-time jobs only, as full-time jobs creation actually increased by 24,000, which was a very good number indeed. Now, the biggest surprise for Friday was the average hourly wages, which is obviously a very important thing that the BOC will look at. The average hourly wages actually jumped by 3.6% in June, coming from a prior of 2.55. Now, that 3.6 number was actually the largest year-on-year gain since the 3.9% increase we saw in May 2018. So that 3.6 was a really good number. Now, the BOC is largely expected this week to leave the interest rates unchanged and to maintain the wait-and-see policy stance, because there's really no need for them to move while all the other central banks around them are tilting dovish. Now, this means that the BOC remains one of the only central banks which has not yet tilted dovish this year. So that makes them comparatively bullish in terms of hawkishness. So they're not really a hawkish central bank, but because they haven't tilted dovish, they are actually one of the more bullish ones, because they are at that neutral wait-and-see policy stance. Now, we can look to trade the BOC meeting this week in two possible ways. We know that the markets are widely expecting the BOC to keep rates unchanged, so all the focus will fall on the accompanying statement as well as the press conference. That'll be very important. Now, in the case that the BOC remains unchanged, as is expected, but they deliver a more upbeat tone towards the recent data we've seen with CPI, with GDP, then that would be positive for the Canadian dollar, and we could look to add some long positions on the Canadian dollar with that upbeat tone. Now, however, if the BOC does tilt more dovish, which is the more unexpected or less expected outcome, if they do tilt more dovish and they say that they think the recent strong data points we've received has been more of a temporary nature, then that will be negative for the Canadian dollar. And that could possibly change the current weak bullish bias back to a more neutral bias. So that'll be very important for us to analyze whatever's in the statement with regards to the recent data points they've seen and whether they have revised some of their projections upwards. Okay guys, so now that we understand why we're going to be focusing on the BOC and specifically the Canadian dollar for this week, we can move on to the charts and look at some of the technicals. Now, in the case that we get a more upbeat BOC, we could look to pair the Canadian dollar with something like the Kiwi dollar, which remains pressured as the markets are now pricing in 2 additional rate cuts from the RBNZ this year. Alternatively, guys, if the BOC comes out a bit less upbeat than expected, we could use any decent rallies against something like the Kiwi dollar as an opportunity to sell the NZDCAD at better levels. Okay guys, so moving on to the charts and looking at the NZDCAD. Now we can see the NZDCAD has quite a big run down from March this year, coming in at just over 630 pips. And we can actually see that we had a great opportunity to get back into this pair right over here at that 89 handle with this daily support and resistance area. Now, if we just look at the chart at the moment, we're going to focus on this recent move down that we've seen from the 88 handle. If we just go to our H4 chart, if we use our Fibonacci retracement, guys, from this recent swing high to this recent swing low, that swing high being at the 88 handle and that swing low being close to that 86.50. If we draw in our fib from that swing high to the swing low, we can see that we do have confluence over here with this minor support area, as well as the 87 handle, as well as that 38.2 Fibonacci retracement. So if we do see the pair coming back and retesting this zone over here, that could provide us with a possible good opportunity for a short entry on this pair, with a stop loss just above the 88th handle, which is above this most recent swing high. Now, if we just quickly zoom out a little bit, if we also use our Fibonacci expansion like we've done over here, if we do see a pullback back into this area, we could possibly look to target something like the 86 handle, which is also close to that 61.8 fib. And if we use the 100% Fibonacci expansion, we could possibly look to target something like the 85.50 or maybe the 85, which coincides with this support that we can see here on the daily chart as well. Now, because we are talking about the Canadian dollar, guys, something that we do need to be very careful of this week is oil prices. Obviously, if we do see any massive moves up or down in the oil prices, that can really affect and change this trade idea. So make sure to pay close attention to any big moves that you see, and whether that's in the risk zone of the market or in the oil prices, maybe with the ongoing challenges that the US has been having with Iran. If we see any escalation in tensions there, that could drastically escalations or de-escalations that can drastically impact the oil prices, which will in turn affect the Canadian dollar as well. So make sure to pay attention to that this week.
Guys, thank you so much for watching this video. These videos are designed to help you think and approach the markets like a professional trader. So it's important for us to remember that you never need to fear the red risk events in the markets like this week's BOC meeting, as they can be some of the best opportunities for us to trade the FX markets. Now, also remember, guys, that the trade ideas we share in these videos are reliant on the incoming data we receive, which can change from day to day and even from session to session. So make sure to pay close attention to any market moving events and news as they come through on your newsfeed on a daily basis. We wish every one of you a profitable trading week ahead, and we'll see you guys again next week. Cheers.